He's rising, well, that's all right with me. Cause there ain't no other place that on the sea I'd rather be. And that second coming's coming, it's right around the bend. That Sunday could be any day, this world's gonna end, but that's all right, that's okay. There ain't nothing we can do about the whole thing. It's a hang on kind of ride. We're spinning through space and time, not in this big old rock, just trying to have some fun. So let's drink another beer. Here's to another year. Let's take another crazy trip around the sun. Swimming in a fishbowl, just floating through the sky. Pulled along by gravity, nobody knows why. So it's a cosmic hallelujah that we're sitting here right now. And Becky's at the bar buying songs, and that's okay. That's all. I don't want to thank her. It's a hangout gathering. We're spinning through space and time in this big old I'm just trying to have some fun. So let's take another view. It's too another year. Let's take another crazy trip around the sun. Coaster flying with no brakes. We're just back up, song rolling down a tidal wave. We're just a bang, bang, stop, just a top of riding over the phone. It's a hang around. We're spinning in space and time. It's a big around, just trying to have some fun. So let's take another beer. Here's to another year. Let's take another crazy trip around the sun. Let's take another crazy trip around the sun. Tempo and go in the night, nature fate. It makes us less in control. There's a beautiful lady who breaks in the sand, secrets that she only knows. For she confesses, she takes me each way that she makes, and it's to her that I must go. Just settle me down, settle me down. Oh, won't you settle me down? Coolest fever in my blood. Oh, won't you settle me down? And I won't live in fear. I know I'm sheltered and watched after too. Cause these people put on the fine business suits and they step on your face till you're going. All the things are cursing must stop forever. It's only bankers and lawyers are showing. Gonna settle me down, settle me down. Oh, won't you settle me down? The coolest fever in my blood. Oh, won't you settle me down? Settle me down, settle me down. Oh, just settle me down. The coolest fever in my blood. Oh, won't you settle me down? Settle me down, settle me down. Oh, won't you settle me down? There's fever in my blood. Settle me down, settle me down. Oh, won't you settle me down? There's fever in my blood. Oh, won't you settle me down? As the son of a sailor out on the sea for adventure. Spanning the view of the captain and crew like a man just released from indenture. As the dreamer of dreams and the traveler of man that charmed and fire. It dozens of books about heroes and crooks and unlearned much both of their style. Son of a son, son of a son, son of a son, there. Son of a gun, load the last time. One step ahead to jail. Now we're in the near future. Southeast of the Florida. You can shake the hand of the mangled man as he greets you at the border. Good morning, everybody. Happy Friday. We will get started here in just a moment. Hear the bells ring as the tide ring and sings. It's the son of a gun of a forest. Seas in my veins, my tradition remains on this planet. Living the cradle. Good morning, everybody. And there's our opening bell. Good morning, Miss Liz. And everybody else out there. Happy Friday. Oh, wow. What a week, huh? Sunday night, big gap down. Tuesday after earnings, big gap up. Little pullback. And man, what a rally yesterday. And I kind of watched most of it. I got in at the start and took my profits way too early. And it was yeah, and then I just couldn't find a way to get back in. So all right. We do have a lot going on. Let's make sure you kind of look over the news headlines. A lot of things starting to come out. One that caught my attention and what I'm expecting is about Apple. Okay. Alphabet blowout earnings marked a peak this year. Well, we'll see about that. Making iPhones has gotten complicated in tariff wars. Apple reportedly has planned to stop some sourcing from China. Okay, and also have Intel coming out. Deutsche Bank sees major trouble ahead. Okay, and also the Fed really kind of backing away from doing any rate cuts.
So the battle between the Fed and current administration is ongoing. We'll see if um, how that settles out. Okay. Um, the headlines themselves don't make trades, and we have to keep that in mind. Uh, but they do set the tone. Okay. They do set the tone. Throughout the session today, we're going to do a couple of giveaways. Okay. And we have one of our affiliates we are working with. It's the Elite Trader Funding. Okay. And we will be giving a couple of accounts, some eval accounts away today. So be ready for that. We'll post them. Give you a question or a quiz or something, and we'll give you those. I encourage everybody, if you're struggling a little bit, to get into a prop account. Now, not all prop accounts are easy because there are some additional rules. Okay. And if you feel that you can follow the rules and also follow what and fully understand what a trailing drawdown is and things like that, make sure you look and read through all the specific rules. There's different ways you can trade. You have an end of day drawdown, a trailing drawdown, and so on. But stop losing your money if you're not getting your goal. Okay. So we have what do we have, team? We have 3 prop accounts available to give away. And what do we, they're 50,000 or 100,000? I just go ahead and text me when you find out. But yeah, Elite Trader Funding is one of those great prop firms out there, and we'll talk more about how to get involved with that a little bit later. Okay, so there are 3 $50,000 prop accounts. Okay, and we have 2 to give away. Okay, sounds great. All right, let's jump into if I click on the right screen here. And there we go. We want to. All right, so I've been watching gold. Gold is back at a support, but before we get into gold, let's get over to crude oil. Crude oil, as we evaluate that. Globex range compared to the daily ATR, we're right in the middle. Okay, we do have the open range candle starting to form right now. The higher time frame does look like we're right at support, especially the 90-minute chart, so getting a small bounce. Heating oil, gasoline are often a lead indicator. Okay. Now, with the higher time frame and price just now bouncing off of the that support level on the higher time frame, you know, I'm going to look for, if price breaks this level, we should probably see a good move lower. Okay. Nat gas. Okay. We have let's see, nat gas, we're looking at potentially on a larger time frame, a double bottom here. Okay. And we've kind of put that in right there. So I'm going to close this one out. See, in the pre-market, while I'm doing my pre-market routine and putting information together, and by the way, we do have pre-market routine course coming up next week. Okay. And for today only, we do have a lowered price, a good deal. The pre-market routine is what I'm going to go through with you right now. Okay. And then, but the class or the course is over 2 days, so I can explain why everything we look at. Often traders are unaware of the things outside the price chart that directly impact what is going on with that. Okay, so The pre-market routine is your information gathering, okay? Now, nat gas, we did just have contract rollover this week. Yesterday, I believe, is when we had that. Nope, on the 24th. The 28th is the last trade date. And one of the things we mentioned down there is the on each month when the last trade date comes to play, generally we see the markets moving, or the crude oil and natural gas, we see them moving lower just before last trade date. Now, last trade date is different. It comes after contract rollover. Okay. So what we're seeing today is that market move to the downside. Okay, higher time frame. We are looking at potentially having we're in a daily zone. Okay, so last trade date coming up on the 28th, we would then look for the buyers for the back month, which will become the new front month, to come into play. Okay, each month this happens with natural gas, crude oil, gasoline, and heating oil. Okay, so we watch for these different things to happen. Also, we have noticed that outside of contract rollover and last trade date, the Globex range, okay, at the about 2 hours before the pit opens, okay, if it's a narrow range versus a wide range or just in the middle, very often we see that the Globex range at pit open, okay, reaches about 50% of that daily ATR. Now, between contract rollover and last trade date, it happens less, okay? But outside of that time frame, which is basically 1 week a month, we often see that the open session, okay, at opening, that we see that natural gas is at 50% of the daily ATR. Right now, the daily ATR is about 10.5 cents, okay? So that's where I'm looking at that demand zone down below. And the measurement goes from the Globex high or the Globex low, okay? So as we're watching natural gas, I'd be looking to go long at 3.027. I do want to watch how price arrives at that level. And also, this is in a daily demand area, okay? So I'm going to come in and adjust my stop loss on this one. I'm just going to I'm going to put that trailing stop on there for where we are currently. Oh, so we're short, so trailing buy stop. There we go. All right, that way if price does keep going down to the demand, then I will trail that down. Equity indexes today are looking to take a small break, okay? And, we're seeing in the pre-market that the volume on the Dow 30 stocks is still very light, okay? As we look at the opportunities that we have on a small time frame to splice into a potential trade, okay? I want to caution you, if you're going to take the trade short, okay, that you have a small speed bump, a little area right below that support area where price can often dip into and change direction, okay? It's not like we have a big wide open area, okay? We do have a gap area, unfilled opening gap from, a couple weeks ago on the S&P. We don't have the same thing on the NASDAQ. So I am looking at potentially, and I do favor more to the long side on the S&P, and I'd love to see price have a target up here around that gap fill. As we take a look over on the S&P and look for areas to make a trade, okay, I want to come back and show you what's going on over here on the left-hand side of the chart, okay? And we have to go back to when we had that big drop, okay? A big move down. This was all the way back on April 1st, okay, or April 2nd. You can see the gap area, can see where we have the unfilled opening gap. This is not where we're going to look to take a short trade. We're going to use it as kind of a profit target objective. When we have an actual zone, the zone will be located in a sell territory. We'll have the support. If we make a higher high, generally the zone is in the upper 2/3. Okay. All right. Now, the area between about that 55, well, 5,600 on up, there's really nothing in the way. It's almost like a gap area. We call that a pocket of points. Okay. So this morning's activity, if price does start to rally to the upside, okay, and I am looking more bullish on this. Okay, this is one of those price patterns we teach in Mastering the Chart Part 2 and what to look for. Okay, so we're making a base that has been there for the overnight session. And I'm going to go ahead and place that trade on the bullish side. We have very few economic reports coming out. The stocks not doing too much right there in the pre-market. So let's set the trade up. We're going to go long, and I'm going to start off with just a couple of micros, 55.10 and a half. Okay, and then I'll set my stop loss a little further away. I'll make an adjustment on that. There we go. This up. Now, if price does start to move to the upside, this is the profit target we're looking for that gap fill. Okay. We will need the stocks to follow through with that. We'll need to see the bank index. The opposite, if you think that the market is more bearish, then right there at support. And I'll caution you on taking a trade at the breakout. Okay. We do have some congestion right over there, and it may be just a kind of a trap condition. The S&P on the larger time frame, okay, our prep screen zones are still pretty far away. Anything above the unfilled opening gap is kind of a wide open territory. We don't have much we don't have much to slow things down. Okay. In the pre-market, though, we're seeing we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 Dow stocks negative over 94 cents and 2 positive. That leaves us with 8 negative. 8 times 2 would be negative 16. Now, what I just went through is we all know that futures are a derivative and they follow the cash market. Okay. The Dow Jones is the only price weighted index. Everything kind of has an equal weight. S&P, NASDAQ, and the Russell are market capitalization weighted indexes. Okay. So we want to know what the cash value is. And right now I'm showing that negative 16. Okay. And then we want to compare that to where futures are trading. Okay. Futures always follow the cash. Okay. So right now, futures are about 10 points overbought.
Order filled.
Relative to the cash market. Okay. What did we get? Oh, my stop loss on net gas. Okay. And then we'll look for the opportunity when price arrives down at our demand zone on that gas. Okay. S&P is an outside day. Price broke the prior session's range. Breaking the prior session's range often implies we can take breakout trades and there's more trending market conditions. Okay. The Globex range compared to the daily ATR is what we call narrow. When you take that Globex range, 63.5, compare it to the daily ATR. When that range is between about 10 and, oh, sorry, but between 0 and 40%, we consider it to be a narrow range. With that narrow range, we anticipate more trending market conditions, okay? So the expectations are if we do get into a trend early, is to be ready to stay in the trade a little bit longer. That may mean you take a smaller position size and give yourself just a little more wiggle room to stay in a longer term trade. Longer term being maybe 30 minutes, hour or so throughout the trading session. Okay. Price just broke above resistance on the S&P and now it's testing old resistance as a support. Okay. And that's why I'm looking for price to at least get a bounce. If we get the trend started, first target is going to be the unfilled opening gap. And then, of course, once we break above 5,600, we will look for the 5,800. Okay. Now, that may not happen all at once today. We've had a pretty volatile week and traders might be a little shy or be looking to take some profits on what they've been doing this week. Okay. Unfilled opening gaps on the top side and the bottom side. Now, the NASDAQ also has broke out of the prior trading range. Okay. We did hit on the Qs last night, right at the close. We hit the 2618 Fibonacci price extension, which correlates with a V top, okay, or a V reversal pattern. So as we're getting close to the open, I want to be attentive to that because if price starts coming back down on the Qs, it could be pretty abrupt. A V-shaped reversal is pretty aggressive, okay? And we're just right where we might make that turn, okay? It has Fibonacci extensions of what we look for in a V reversal. Price moving lower, okay, or breaking support, we have to be mindful that yesterday's rally was on light volume, okay? So if price does start to move down on the S&P and the Dow, oh, sorry, S&P and the NASDAQ, these areas here could have fast accelerated moves, okay? A strong retracement. I'm not expecting that. Daily chart on the NQ, okay, is showing that price did close above, or sorry, yeah, closed right at resistance. And we're looking for that target on the daily chart to come and possibly touch that 50 daily simple moving average. Now, if price gets back above the daily moving average, we're going to see more of the institutional traders start to pour back into the market. Okay. All right. So on the smaller time frame on the NQ, always take a look at what's going on with the stocks that are the large market cap stocks. Now, the large market cap stocks that we see control about 47% of the move that we see on the NQ or the Qs. The NASDAQ is a market capitalization weighted index. The large market cap stocks move the index more than the smaller market cap, okay? These large market cap stocks account for a large percentage of when the market moves up or market moves down. Always remember that if you're wondering if you're going to have any follow through, that you got to start with the stocks, move to the exchange traded fund. Okay. Stocks move first. That adjusts the exchange traded funds. And then the futures adjust. Okay. Now, a lot of folks think that the futures are first. It's never that way. Futures are a derivative market and they follow the cash market. Okay. So NASDAQ also, as we come back and look at the larger time frame, we notice that the ATR, or sorry, the Globex range is 277. The daily ATR is about 965. Okay. Wow. When we have a narrow Globex range, we often have trending markets. Okay. And it may be that slow grind that we saw yesterday. Okay. But they tend to keep going in the same direction once we get the direction going. Okay. So these are little odds enhancers. Globex range compared to the daily ATR, whether we're inside or outside the prior session's range. If we're outside or have broken outside, okay, we anticipate more of the gap and run, okay? If price is inside the prior day's trading range, okay, we expect things to be a little more choppy and the better trades to happen later in the session, okay? The NASDAQ and the S&P are both outside days currently. We want to see where price opens relative to the we want to see where price opens relative to the prior session. If price has not broken outside the prior session's range, we often, large percentage of the time, see the gap fill. Okay. If price trades outside that range and then opens inside, okay, we do see a gap fill, but it is not as strong as an inside day. So currently, where price is trading at right now on the NASDAQ, okay, one of our first targets are going to be the gap fill, okay, which could lead to, you see, we're down about 37 points. So a gap fill would be 37 points higher, okay. Coming back to the small time frame, trying to find a way to get into that, okay. We do have a breakout above this basing, okay, which would be an entry. And we also have, and that would be more the continuation, or we have the opportunity right now to take a breakout to the downside. The downside breakout does have what we call as a speed bump, an obstacle, okay? And that obstacle can be a trap, okay? So I want to give the market a little time to, well, we've got about 8 minutes before the market opens, so we'll wait to see how things play out there, okay? All right, the Dow and the Russell are still inside. Now, as an inside day right now, we have not broken the prior session's high or low on the Dow, okay? Inside days often fill the gap the same day, but on inside days right now, starting off as an inside day, that may change, okay? We don't take breakout trades, okay? Now, the S&P and the NASDAQ, we can take breakout trades, but when we're still inside the prior session's range, things are often a lot more choppy. Now, all of these odds enhancers and things that I'm talking about, as we assemble the information, they lead us to a conclusion of whether you feel really bullish or feel real bearish, or you're just kind of going, well, I need to wait and see, okay? If you have mixed signals, then it's a wait and see. If you have strong signals for the long or short, then you can be a little more aggressive. But you need to learn these things. But first, get to know them, verify everything before participating or trying it, okay? The more you verify it, it becomes very easy to put that into a trading plan, okay? Russell, also an inside day. Okay, we're expecting a little more choppier conditions on the Russell and the Dow, since they're both still inside. We're looking for zone entries only on the Russell and the Dow, okay? And yeah, just looking down, the Russell also has that little, we call it a speed bump, a little obstacle, if you're going to take the breakout to the downside. Okay, Russell also has a little sell area if price starts to go back up. So we're still putting together our what we anticipate to happen. Okay. And we found supply. This is why we use the buy territories and sell territories. You know, it looks a little confusing having so many things on the chart, but they're all reference points. Okay. And these reference points tell me that, hey, in this area, there were more buy orders than sell orders as larger participants accumulated orders. Okay. The breakout of that area says, hey, the buy orders are stronger and we've taken out the sell orders that were at this point. The inverse of that is having a support and then having a sell territory. And then looking for where the unfilled orders are. When price dropped out of that area, price returning to it, we had leftover unfilled orders. We just got filled on the S&P. Okay. Let me come back in and place my stop loss on this. Oh, wait, I already have a stop loss. Every time you get into a trade, depending on how you view your risk and what your trade plan is, make sure you have a protective stop loss. Okay. Once filled, immediately go back and look at what your maximum loss could be. Okay. Now, the reason for that is sometimes you might get into a trade thinking, yeah, I can handle the loss, but you might have gotten stopped out on a couple of trades earlier. And then you start looking at that number and say, man, maybe I need to reduce it down to a smaller number of contracts. Okay. Remember, our emotions play a huge part in trading. Okay. And whether you feel good about taking a trade or whether you feel a little more pessimistic. Okay. All right. So we have that. Let's see. How are we doing on crude? Okay. Just waiting on crude. We're about 2 minutes away from the market open. I have been using a new news service. Okay. Now, I don't subscribe to it yet, but I found it to be very, very helpful. And what I'm watching for here right after the session open is the market open imbalance, whether we have buy imbalance or whether we have a sell imbalance. There is also the market on close imbalance, okay, which we had yesterday, and we saw the S&P had an accumulative, a lot of shares to for the buy side. And the NASDAQ had a lot on the buy side. The Dow had a lot on the buy side and the Mag 7. Okay. So what we're going to look for as the market open is kind of see what are the buy imbalances here. Okay. Or sell imbalances. We're going to see that report come out and it comes out right at 9:30. And I'll refer back to that in just a moment. All right. Still waiting on that gas. Okay. Gold going a little bit lower. Our exchange traded funds, which are just now opening, we're seeing not much of a gap on the Qs and the SPY or the Dow or the IWM. So kind of a non-event. All of these have gapped down just a little bit at resistance. Okay, leading more to the bullish side of it, is looking for that potential breakout. Okay. On each one of these indexes, look over to the left, you'll see that there's a huge gap if price breaks above resistance. Okay. And gaps are like magnets. Price goes through those areas because the lack of buy orders or a lack of sell orders. Okay. All right. I did take a trade on the micro Bitcoin. I have been watching and monitoring the Bitcoin and the micro Bitcoin and micro Ethereum. Okay. More so the micro Bitcoin. Remember, this trades in $5 increments. It's relatively cheap, but each $5 move pays 50 cents. Okay. So we are seeing sizable moves on these. Okay. But make sure you know the parameters for how this works. Okay, you can go out to the cmegroup.com and participate in that. Okay. Now, looking at the other markets, I've noticed that the agriculture markets are starting to pop and move around a little bit more, mainly because of the new trade deals going on. Okay. And the tariff stuff that's going on, we're seeing that part of the trade deals are that they buy our soybeans, they buy our corn, they buy our wheat. Okay. We're making deals with that. We're giving them good deals for buying. Okay. And, it's getting competitive. So our farmers, and we start kind of backtracking that, if we're going to start making the United States a productive farming community again, okay, instead of buying everything from South America and outside the US, okay, and also Mexico and stuff like that, is that there's going to be a need for more equipment, more financing to start building these farms, okay? So pay close attention to what's going on. Soybeans just got a nice um, let's see, the 25. Okay, sorry. The market order imbalance, we're selling at the beginning, okay, or selling, okay, sell orders, but they're small, okay. So I'll come back and elaborate on that a little bit more. That'll be a new section that we have in our pre-market routine, okay. Let's see, what do we got going on here? Well, we made a little bit, not a lot. I'm going to come back in on this. I'm still pretty bullish.
Order filled.
And I'm going to have my stop loss right there about 5,500. Okay. I got $102 worth of risk. Okay. And we're looking for that continued move up. Let's grab the NASDAQ. NASDAQ still making higher lows, higher highs. And I'm going to stick with just a couple of micros, keeping my risk small. Come in about 319. Let's make it 320. I'll be looking at a buy stop market. And I'll come back in and place my stop loss. Actually, I'm going to use a trailing stop on this one here. Okay. Trailing stop in place. Okay. Taking a look at the stocks. Okay. They have gapped up for the most part. There it is. Way up there. Okay, so taking a trade on the NQ, realizing that we don't have much in the way if price continues to go up. Although I would be watching for any area right in here. Okay, see if there's any sellers that are still left over there. Okay. I'm also gonna cancel that. I'm gonna put a trailing stop on this. There we go. All right, what else are we in? Okay. I also want you to observe how in last Sunday I put some pictures on out there on my X account, showing the correlation of the crypto markets with the equity indexes. Okay. Now, the correlations are there and the pictures are there, pretty easy to see. Okay. But what we need to see is who moves first, the crypto market, which trades 24/7, or is it the equity market? Which one is leading? Okay. Especially when you start noticing the thing, how these markets are correlated. Let me just bring that up here. So last Sunday, doing a little review of this, we saw that these were S&P, NASDAQ, Dow, Russell. And if you look at the price shapes, okay, and then you start going through a couple of the other charts, okay, Bitcoin, Binance, Avalanche. Yeah, I mean, they all have a very similar pattern, okay? But what we want to discover is which ones are leading and which ones are following, so we can use that as an additional odds enhancer there, okay? Okay, so we got trailing stop. We're doing okay on those. Right? Still waiting on that gas. Now with crude oil, you can often use heating oil as an odds enhancer. Okay, heating oil and gasoline tend to move before crude oil. Okay. So as you may see as you're going through and watching the live stream here, and if you're new to understanding things outside the price chart, okay, that directly impact what the price charts are doing, okay, it's time to learn about those, okay? What is outside of crude oil that gives me a odds enhancer that price will go up or go down? Now, again, heating oil and gasoline are a couple of those things, okay? Those items are outside this price chart, okay? Same with futures, okay? What I need to see to stay in this trade is the large market cap weighted stocks, and the two largest on the S&P 500 right now are Nvidia and Apple. Okay. So Nvidia and Apple, as long as they're moving up, so goes the index. We also include the bank index, the BKX. We don't want to fight the banks. If there's money inflowing to the banks, which then leads to the markets, okay, we want to see that the bank index is also moving in that direction of the trade that you're in, okay? Now, I do like to see that bank index above the moving average as kind of more of a bullish sentiment. Right now, we're still slightly below it, okay? Bank index is basically 24 of the national regional banks, okay? Let's see, price moving up. We don't have any reason to get out just yet. And just watching Nvidia and Apple, there's no real threat at this point, just the market opening. We do have trailing stops on each one of those, okay? Dow. Let's go back out to a larger time frame. Dow is still an inside day, so we're still going to look for zone entries only. I have another area up here that I am interested in the sell territory. We got really close to that. But the nice part about understanding inside days and outside days is you know what you're waiting for, and you are aware of the trading environment. Okay. And that trading environment can be really bumpy, like on an inside day, or it can be nice and trending with an outside day. Also, we mentioned earlier about the Globex range compared to the daily ATR, and knowing what to expect. Again, another verification. Globex range was narrow, so we're expecting more of a trend to develop. Okay. May not start right at the beginning. But also, we noticed that price opened inside the prior session's range. Okay. And as price opened inside the prior session's range, but it was an outside day, we still filled the gap. Okay. We often fill the gap the same trading day. Okay. When we open inside the prior session's range. Now it looks like our trailing stop took us out on the NQ. Okay. I do have pretty tight stops sometimes. Yeah, we're just kind of looking over the stocks. Still kind of that morning shuffle. Now, if price breaks below the support area that I've identified, there's an area just below it, which was often what we call a trap. This is where there was an accumulation of orders prior to the move into the close. And of course, it must have been more buy orders and sell orders pushing that up. Okay. Identifying that area below that support is where we often see these little traps happen. Okay. Everybody gets bearish and then all of a sudden runs right into some buyers. Okay. Our internals, what's going on here? Well, at a glance, the VIX is not showing fear or greed. Notice on the tick, the NYSE tick just calculates the up ticks over the down ticks on the NYSE. Okay, New York Stock Exchange. We can see that it's right at 0. Okay. So we have equal number of upticks over downticks. That's not giving us an extreme to get into a good momentum. Okay. Now price dropping below, we'll look for buyers. Okay. Which will be more selling, more downticks than upticks. But once we get to those extremes, we often find an area where we can get a reversal or extreme buy program versus sell program. Right now, we're not seeing either one, and our markets are kind of chopping sideways. Okay. For the advancing issues over declining issues on the NYSE, we're right near or at that no trade zone. When we have extreme advancing issues or extreme selling issues, we look for price to intersect with demand or supply for an opportunity. The extreme levels are important. Okay. When we're right in the middle, this should temper your expectations right now to be more aggressive to get in or take a long or take a short trade. The NYSE trend, $TRIN, is a short-term traders index developed by Richard Arms in 1970s. Okay. Also referred to as the Arms Index. Okay. The trend being low we associate trend low, time to go, trend high, time to buy. Okay.
Filled.
Yep. Looks like S&P just pulled back enough.
Order filled.
Oh. All right. What do we got going here? Oh, rookie mistake. Yeah, teaching class, sometimes I get a little off here. I'm going to close this. It's kind of yeah, it was a rookie trade. Let's get close.
Order filled.
Yeah. You know, just like playing pool, if you make a slop shot, you know, it doesn't count. Okay. So just you know, if you make a mistake, don't hold on to that trade. Good saying that I remember every time something like that does happen. And yeah, we do make mistakes. I made a big one yesterday by leaving an open order and then going to make something to eat or get some coffee and come back and like, whoa, what happened? You know, that kind of made me made me have a kind of a sour mood yesterday. After that happened. Anyway, but there was an old saying by Zig Ziglar. It's like, you know, and it's basically if you make a mistake, so it's like if you got to eat a frog, you don't stare at that sucker too long. Okay. So yeah, that was a frog. And I just had to get out, not sit and wait and say, well, maybe that slop shot's going to work out. No. If it's not part of your trading plan, best to get out and then regroup. Okay. Boy, sometimes it's a little difficult trading when there's not a whole lot to jump into. But let's come back to our larger time frame picks. Nat gas on a larger time frame. This is a daily area between of demand. Okay. We're also seeing that soybean meal is in demand. And let's just bring those up. Wheat was also one that was in demand or getting close to demand. Soybean meal. Now, you may not want to trade some of the agricultures or the metals. You may be just fixated on the indexes. Okay. I get it. Indexes can be a little more volatile, but you know, there is often several good trades on these, especially when the indexes are not giving us a solid good trade or market conditions are a little off. Sometimes they're moving money over into the agricultural products, the metals, the energies, okay, and so on. Be willing to look outside of that. Okay, so we do have a potential entry on soybean meal. And I'll take that as it confirms. It's, as we call it, a confirmation entry. 2876 or 287 and 60 cents. We're on the May contract, so that's K, and we got SMK 25. $287.60. Once I'm filled, I'll come back in and place a stop loss on that. Soybeans got mentioned yesterday that Japan is part of the deal with Japan is that they're going to be buying the US soybeans. Okay. Now the soybean market has been kind of bought up where we get a lot of our soybeans from South America because of the different seasonal aspects of it. The nice thing about soybeans is soybeans can be harvested 3 times a year. Okay. So having crops in the southern hemisphere as versus in the northern hemisphere, okay, that kind of keeps our inventory where we need it. Okay. Things may be changing in that because China has bought up most of South America and their crops down there. Okay. And right now, China, with the trade war with the US, does not want to share a lot of those things, including their precious metals and things like that until some things get worked out. Okay. But digging a little deeper to find out more about what's going on with the soybeans and the agriculture is also beneficial, especially if you're watching weather conditions as they can play a part too. Okay, let's look at corn. Nothing to do on corn. Bean oil. Yeah. Let's come back to soybean meal. Okay. Now, soybean meal is mostly used to feed cattle. Okay. So as plans are being made for more U.S. meats, U.S. agriculture, the MAGA movement, okay? Soybean meal has been very cheap for a long time for a lot of these farmers, okay? The cattle. But if the demand starts to increase for more U.S. grown meats rather than meats coming from someplace else, okay? It's like China gets a lot of its pork, hogs, lean hogs. It gets a lot of that from Denmark. Okay. So understand how the flow and who's in control of these agriculture products. Okay. They can provide very good trades even on an intraday basis. Okay. All right. What are we doing on the equity indexes? All right. Looks like we might get that trap. Now, I'm not going to take the breakout entry because the stocks are not selling off. Okay. When you have that speed bump area, okay, and you're contemplating whether that's going to be an obstacle or price is going to go right through it. You know, most folks just look at trying to take a breakout trade. Okay. If this is going to be a trap condition, we would not see, well, we would see that the stocks are not selling off. Okay. We're getting little pullbacks, but they're not just making lower highs and lower lows. Okay. Right now, they're just pulling back a little bit as we would expect as we approach the 10 o'clock hour, 10 Eastern. Okay. We do have a consumer confidence report coming out. Okay. Now, on the consumer confidence or consumer sentiment, okay, keep in mind this is a Michigan consumer sentiment report. The University of Michigan. A little trivia for you. For $4,650 a year donated to the University of Michigan, you can get this report 2 weeks before it is published. Okay. Now, all this report is that they're doing a survey of about 500 homes around the United States and how you feel. Okay. This is last month's surveys. It's not this month. Okay. So anytime you're approaching an economic report, you have to anticipate they already have the information. The information is already out there. They already know what the numbers are. Okay. The media gets this information about 45 minutes before the actual release. Okay. So what were the indexes doing prior to this? Well, they started to go up. And now on the reaction of this, maybe we'll get a drop down into that demand area, that speed bump area, and be able to participate in that trap. Okay. All right. So as we're speculating right here, the stocks are not selling off. The exchange traded fund is just getting bumpy. Okay. We've made our first break of a low point. When I'm looking for directional trades, we do like to see that price takes out a couple of not just one pivot low, but two, okay, or breaks above two pivot highs, okay, for trend direction. Right now we've got one, okay, and price pulled back. Once we break the second one, then we'll start looking for that downtrend to be established, and as price moves back up to find the sellers, we'll jump into that. Nope, look like we just got filled on the soy meal. And I'm going to come back in here and place a protective stop right at the low of the session. Okay. As price goes up, we have this area where we had support and resistance. This is what we also refer to as a dead space. Dead space areas can be easy price movement for that, or easy for price to move through that area. All the orders have been filled in this area. If you're stepping out to a larger time frame, you'll see that this is a more of a double bottom with a higher low. Okay. So least of resistance to the up, we do have a risk on that trade. Come on to the equity indexes here. Equity indexes are kind of being quiet after yesterday's hangover, or having a hangover, yesterday's rally. Today's kind of they're hoping it's going to continue, but we're still waiting on some news and reports to come out. The bonds here on the larger time frame are building a huge accumulation of orders. Okay. And we're about to break out to the upside. The longer ones, like the 30-year and the 10-year, will come out to a larger time frame. Now, if you look at how long this accumulation has been taking place, okay? And if you think back about the announcements that have been coming out, okay? One of the things that the U.S. needs to do is buy bonds, okay? Oops, that's the wrong color. So we're seeing an accumulation of orders. We're seeing a bottoming pattern. Boy, we could probably go out to the weekly chart and see well, we could definitely see the range. Okay. So over the last few weeks, we have seen an accumulation of orders on the bonds. And as they start pushing price back up, make sure you do your research and find where are the potential profit targets for that. 120. Now, part of our pre-market routine and what we're going through is as we watch the bigger markets, okay, if the money is going to flow back into equities, okay, if the money is going to flow back into the equity markets, we often see that the bonds and notes will be pulling back. Well, having said that, let's go out and look at. Yeah, no wonder we haven't had a lot of trades. We're seeing that the US dollar is basing sideways. We're seeing a 10-year and a 2-year yield also not in strong uptrends, at least on the hourly chart. Okay. Of consolidation. Just another odds enhancer there. When you see the US dollar compared to the 10 and the 2-year yield, if they're not all going in the same direction, it's going to be a little more bumpy for the trading session. Okay. All right, let's come back out. We just had our economic report come out. And not a whole lot of activity. Okay. Do we have any questions? I mean, comments? What are you guys looking at? Well, I'm just waiting to be waiting to find an entry. So if I'm going to go long, yeah, that's what I'm doing. All doing that. A lot of waiting. Thanks, Callie. Yeah, how many have noticed that during the trading session over the last couple of days here, that there's a period right in the beginning of the session, right about between 8 a.m. and 11 a.m. where things are kind of quiet. Okay, the market almost goes into a stall mode. Okay. That looks like our soybean meal working out. If you're new to working with us and just getting an idea of what we do, and you're saying, how did he find a buy in that area? Well, it's a process. We look for where the sellers were pushing price down, which is resistance. There's more, just simply more sell orders than buy orders. The area below it in the green is our buy territory. That's where there were more buyers than sellers. Should price leave that area pretty aggressively, most often they didn't get their orders filled. So when price runs back down to that area, okay, we see that there were still some unfilled orders still there. Often when traders identify supply and demand, they're really just playing support and resistance. Support and resistance does have its play or part in all of this. But the more times that price hits resistance, the less sell orders are there. Okay. So hits it once, that's where we had the largest stack of sell orders. Price came back up into that area. We had more sell orders, but the stack has gotten smaller. Our third attempt, we've gotten even a smaller stack of sell orders. The next time price came up there, it went right through that area, taking out the sellers. Okay. Then when price comes back down, we find where the buyers are at. Okay. So potentially this will work out to be a pretty good move. We got a good upside. We've already seen that bean oil and soybeans have had a strong move. So now it's time for the soybean meal. Okay. How are we doing on Russell? Russell, we're also waiting. Now, Russell is still inside the prior session's range. Okay. Russell has not filled the gap yet. Okay. Very often on inside days, we see price come back to that 5 p.m. gap area. Okay. So I'm looking for an opportunity to go long the Russell and anticipating that the gap will fill today. Okay. That over time, you develop those statistics and kind of get an idea of how that works. Okay. Now I need a zone entry. I can't take a breakout trade. Okay, so I'm going to drop down to a smaller time frame to find a way to get into this. Okay. So a zone entry would be if price breaks support and drops into a demand zone. Although there is a new pattern that I've been studying, it's going to see this area here where we have this particular price pattern, where we have support on one side, we have a small breakout, and then we have another, resistance, not support, over on the other side. This has led to a strong move. Now, I just said I'm not going to take any breakout trades for the inside day. Okay. But this pattern is saying, you know what? It might be okay, but you're taking extra risk. Okay. If you're okay with the extra risk, then you can join me on this one and we'll take the breakout to the upside. Okay. Think of it as you're at a crosswalk and the crosswalk light says don't walk. But you observe left and right to right and left, depending on which side of the planet you're on. Okay. And you see that the risk is not there. Okay. There's no traffic. Have anybody ever crossed the street when the crosswalk said don't walk? Did you understand you were taking a little extra risk? Yeah. Okay. So we understand we're taking a little extra risk on this. I'm going to take 3 micros on this. I'm going to enter as price breaks above that, and I'm going to use this level right down here, 1946, as my protective stop loss.
Order filled.
Okay. We've entered the trade. Now, a trader can use a trailing stop, or you can use a hard stop. Okay. 1946 is where I'm going to place my hard stop. And I recognize I'm risking $96 on this trade. Okay. Always make sure you acknowledge what your risk is. As we look up and left, okay, we do have a sell territory. And we have that potential area where we have some leftover sell orders. Okay. This will be where your first profit objective will come into play. Now, if you took multiple contracts, you can take one off and let one run, okay, based on your trade plan. Okay. Now, as we're looking at this trade developing, we took a breakout trade on an inside day. Okay. But we had some additional information, and this is a price pattern I haven't shared with everybody yet because I'm still studying it. Okay. But having that little bump out of that where you have resistance on the left and then resistance on the right has, in the examples that I've collected, shown a good move to the upside. Okay. And that's what we're working on now. All right. So that one's working. Soy meal. Let's see what's going on with our Bitcoin. Okay. Bitcoin right now I have profit target 97,000 and 100,000. Now that might get there today, it might not. Okay. Now the price pattern that I'm looking at is based off of having a price moving up and a shallow retracement. And notice how we made almost like a high tight base, okay? An ascending triangle. Okay. Now, taking a measurement, let's just do this. So I'm going to go from demand zone all the way up and this pullback. Using your Fibonacci tool, measure from the distal line to this last rally. And we're looking at that retracement. The more shallow the retracement, the stronger the potential move to the upside, that the momentum will continue. So I'd use a 23.6 and a 38.2. Okay. That's the retracement. And see, we held the 23. So this is a momentum move. Okay. Now with that momentum move, profit target, we look for the measurements off of that to be the 127 or 1618 extension. So when we have a high tight base or momentum trade, the 127 or 1618 extensions okay, are those price levels that we're looking for as our initial target. Of course, it's going to hit the 127 first. If we're in a strong momentum move, then it'll go up to the 1618. Very common, okay, for this price pattern with the shallow retracement. Now, that might be encouraging for some of you that are holding Bitcoin. Say, yeah, 97, boy, that would just spark a big old rally, okay? Now, Bitcoin, MBT, we're trading the May contract. MBT, K to 5. Not bad, not bad at all, okay? It's not a lot, I mean, every time it moves $5, it moves $5 increments, okay, you make 50 cents. I'm only trading 2 micros. The intraday margin rate for most brokers on the micro Bitcoin is pretty cheap, okay? Very, very cheap, okay? But whatever broker that you're trading with, okay, make sure you know the parameters for that, okay? Yeah, that would be a good move. Okay. Soybeans is still working. So we've got trades. Our Russell is being a little slow. Okay, but micro Bitcoin and our soybean are still making money. What's going on with the S&P? I don't have a place to take a breakout trade. I'm still gonna wait. And it looks like the Nasdaq got a nice move, but I failed to get an entry. Then we took out those higher highs, establishing that the trend is still up on that. Russell, you always got to be the opposite of everybody. Dow is also still an inside day, but has filled the gap. NASDAQ has filled the gap. S&P also filled the gap. The only one that hasn't filled the gap is the Russell. Okay. gap fill on the Russell is going to take us right up into that area there. So my profit target for this trade on the Russell that I took on the breakout, okay, 1963 area, okay, and we have risk down to our stop loss, okay. Boy, nice. At least we're starting to develop a trade range here. S&P is an outside day, so we can take breakout trades. For a breakout trade, price must hit a resistance level minimum 3 times. Okay. We might be able to come in on that one. Yeah, it looks like the NASDAQ is just a little bit faster. Let's see what the stocks are doing. Oh, wow, what a move on that gas. Oof. Guess there was a bigger zone down there, but I was waiting for it to get a little lower. Things are still quiet on the NYSE. No buy programs, no sell programs going on. It's kind of oscillating back and forth at the moment. Looks like the NASDAQ broke resistance. S&P is still looking to break it. So we're still on a SPY, excuse me. Let's go back over to S&P. What time is it? Okay. What I'm waiting for and what I look for here is to understand my risk if I take a breakout trade. Okay. We look for that leg base group of candles, and I see one right here. And I use the low of that for my protective stop loss. If I'm taking a breakout trade. Okay. Now, right now, if I took the breakout trade on the S&P, it is outside my risk parameters for taking the trade. There's too much risk on it. Okay. Everybody should have their own dollar amount they're willing to risk on a trade. So I need to see if I'm going to take that breakout trade to the upside, I need to see a fresh leg base prior to the breakout that is within my risk parameters. Okay. So potentially we'll build a fresh leg base. Looks like we got the leg in and working on the base. And then I'll be able to have a smaller stop loss using the same parameters. Very often a breakout trade will fail. Okay. If the risk is too big or the leg base group of candles is pretty far away. For example, the earlier when we were looking to take the break to the possible break to the downside, and the leg base was up on top, which was be way too much risk to participate in that breakout trade. Okay. All right. That looks like we're coming back down here. Chop, 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 chop.
Order fill.
Well, that boring little trade on soybeans is doing okay. Let's see. Ah, I like this website. I know some of you are just getting familiar with it, but it's right now it's free. People are flocking to it. It's almost like an old Bloomberg, like the Bloomberg terminal. If you want to pay for it or go elite, you can you get some more features. Right now, I'm just using the free version of it. But these breaking news stories, they do impact price. The People's Bank of China, okay, will keep the one exchange basically stable. So there were some things coming out about China. Uh, oh, sorry, was that? Yeah, People's Bank of China, right? Yeah, yeah. Not Canada. Canada doesn't come out to later. Okay. Just checking over some other headlines. That gas getting a nice move out of that demand zone area. Soybean meal. Our FX markets are pretty quiet. It's coming off of support. Oh, it went right to that trap. Dang it, I wasn't there. Let's see. Wow, did the Dow NASDAQ do the same thing? Not yet. Okay, I'm gonna hit that Russell again as well on the break above that area, 1952, and get back my 98 bucks. Or we'll be looking for an opportunity if price comes back into that zone. It's still 5 minutes away from the bottom of the hour. How about the Dow? The Dow had a much different picture. No speed bump areas. All right, just another little lesson here. With the leg base group of candles, okay? The leg candle leaving is smaller than the leg candles in the zone. This means it's only going to use this area one time, and it should be a proximal line entry where price just hits the top of the line, doesn't go too deep into it, and then changes direction. Okay. It looks like it missed our leg base just a little bit. Okay. Now, a couple of other things I'm looking over on the left-hand side. Okay. The bank index has gotten bearish. Okay. Bank index is bearish. Nvidia is still going up, but Apple's going down. Notice all that chopping sideways. Okay. We're getting mixed signals here to be very bullish. Okay. In order to sustain a strong move up or a strong move down, we need the bank index. Now, a move back up, we need the bank index showing positive. We'd also need some help from Apple. Okay. In understanding all of this, thanks. Well, thanks for your question out there on the YouTube channel. Said, I'll just read the question out loud. It says, Jeff, you seem to have so many rules before taking a trade. What about trading just based on the price charts? Okay. Well, ultimately, we are. But the things outside the price chart can impact whether that trade is going to be going for a good profit potential or if the risk is higher or lower. Every trader has the picture on the price chart of where they will take action and help manage risk. Okay. I mean, it's like we all know what we're going to do if we're standing at the street corner and we want to cross the street. Okay. Okay. We know what we're going to do. Okay. But is that the information around that street corner? Is it a busy street? Is it a quiet one? Is it really loud? Okay. Is there a lot of traffic? Is there little traffic? Does a crosswalk say walk or does a crosswalk say not walk? Okay. So even though we just put one foot in front of the other to cross the street, there's a lot of things outside of that activity that we gauge the safety of doing that. And I want to finish up on that question now. Okay. It's a great question. Having these other rules about looking left and looking right. Okay. Am I taking more risk in these market conditions? Now, several of the things that we have talked about, inside day, outside day, okay, all of those have led me to making a decision whether price is going to fill the gap early in the session, if the market's going to be setting up for a trending environment, okay, if there's going to be follow through. For many years, I've watched technical traders and teaching new traders what to do, but see, the experienced traders are looking at many things outside the price chart, especially if they're going to be trading live in front of you. Okay. They want to be right. I'm in the same group. I want to be right. Okay. I don't want to take a losing trade in front of anybody. So in order to stack the odds in my favor, okay, what are the things outside the price chart? For example, MACD crossover. Man, when I first saw that instructor up on the stage showing that MACD crossover, I can do that. When those two lines cross, look at in history, every time, single time, it changed direction. Until I placed a trade on a MACD crossover and it failed and I lost money. Well, I must have made a mistake. Okay. So indicators, oscillators, those are great things on a price chart, but they didn't tell me that there was an upcoming economic announcement. They didn't tell me that there was higher volatility, or these markets are going to be more for trending today rather than
Order filled.
what happened there?
Order filled.
Oh, that's too quick. Okay, so I really appreciate the way the question came in, okay? But see, the information that we were collecting was telling us about this trading environment here. Not just the price chart. Yeah, things were choppy, designed to take our money, but the breakout trade right into that speed bump, and we didn't expect price to go too deep into the zone, okay? We just expected it more for kind of a tap and go. Now, those details, some of those are on the price chart and some of them are outside the price chart, okay? The additional piece of information that we talked about earlier this morning about a narrow Globex range, okay? If you remember back in our pre-market routine, that information that we gathered and we used that information to confirm, okay, is that when we had a narrow Globex range, our expectations is sometime today we're going to have a good running trend. Whether that's going to be to the downside or to the upside, that still remained to be seen. Okay. Now, coming down to the application, by understanding the environment around whether the Globex range is narrow or wide, or if it's in the middle, we can then manage our expectations and size our positions properly and understand whether we're taking more risk or less risk on a potential trade. The other information is sometimes all the indexes are an inside day, so we're waiting. We could go out and trade something else. We could trade something like soybean meal, which is going pretty good. Okay. Now the information was on the price chart. Okay. The information was on the price chart where to be a buyer. Okay. But depending on the time frame a trader would be looking at, they would say, well, that's directly in a downtrend. Should be going short. But identifying where the buyers are on the price chart, understand the market conditions, understanding the risk involved. Okay. All of these pieces come together. Now, these are things that I've exploited rather than just saying, yep, right there, you could probably put a indicator on there and see that, let's see, we got maybe Bollinger Bands will come into play. Yeah, price went outside the bands. 96.4% of the time, price stays within the lines, okay? But price, we got an outlier. Price traded outside the band into a demand zone, okay? See, we could bring up any indicator or oscillator, but this only tells me what happened after the fact. It doesn't help me forecast the turning point, okay? So I can elaborate on that a lot more. If you want to head over to our Discord room, okay? And over in the Discord room, I'd be happy to answer some more questions, but we got to conclude our live stream today. So let's just do, we got soybean meal. What else are we in? We got the Bitcoin. We're in the S&P. Okay. And we're going to need some help from Apple if the S&P is going to continue to go up. Okay. We're going to need a little more commitment from the banks. Okay. I hope that answered your question. Thanks for asking those questions. Before we go, let's do those two giveaways. Okay, we have two prop accounts, $50,000 prop accounts, evaluation accounts for you to get involved with the Elite Trader funding and get in and participate in that. And thank you for the affiliation, and thank you for Elite Trader funding for giving us those things. Team, what do we want to do to for the first couple of traders for that? See, I've been trading in the prop account for a while now myself, and just an extra source of income. Okay, that was a nice entry. Give me an idea what we want to do. How about the first if you type in the chat, I want the eval account, we'll go with that. Okay, type it in the chat if you want to start an evaluation account. Now remember, once you pass the evaluation, then you move up to the next level where it becomes a funded account. Okay, funded simulated account that you start getting paid on. Very good source. Okay, so if you'd like one of our $50,000 evaluation account sponsored from the Elite Trader funding, please let us know. Just type it in the chat and we'll get that right to you. Okay, make sure you put your in the chat so we can get your email as well. Hey, everybody have a happy Friday. I'll be over in our Discord room in the voice channel if you guys need anything else, and we'll just get back to trading. Remember, our pre-market routine course is coming up where you can learn all the things that I've just been talking about as part of the things that we were looking at for today to help us make some good trading decisions. Okay. Wow, that's looking pretty good. Wow, soybean meal actually looking good too. All right, so we're leaving you with a good green on the screen. Okay. Some good lessons around what we're looking at. Okay. And I'll see you over in the Discord. Everybody have a happy Friday and good job. Thank you, team. And I think we got you covered, Greg, for an evaluation account. All right, I'll see you over in the Discord room. Everybody have a good Friday, and we'll see you on Monday. Bye now.